Okay, this is Jeff Scott, and this is my weekend review for December 22nd, 2013, 9:26 a.m. Obviously, the futures are not currently open, so they're not going to have any influence over what I say to you today. This will be my typical presentation, but I'm going to actually review some of my performance because I've had a lot of comments about people who, they can't make money with this software, they can't make money with that software. And I wanted to talk a little bit about how I look at software and how it has affected my trading. I usually don't show you my background screen, and let me kill my Outlook. Just for the heck of it, I'm going to leave it on for a couple seconds and comment a little bit about software programs. There is no holy grail in software, period. There are lots of programs that establish pathways, guidelines, shortcuts to help you find what you're looking for. But I've yet to find even the robot traders for Forex, which you'll get across your Outlook daily. I've yet to find something that replaces me. Or in your case, you. There are, however, lots of tools that I think can make our job easier. And you can see a lot of different tools across the top of my desktop, and I'm certain you've heard of many of these tools and probably even own some of them. And I don't know why I keep putting all these tools on my computer. Maybe it's to remind me not to buy more tools, but by the way, that doesn't work. I keep buying them anyways. But I have a lot of tools that I've purchased over the years that I don't use. And what I show you on this webinar is what I do. And I can't tell you the number of calls and emails I got with people complaining about a specific software, whether it's HGSI or something else. And usually the complaint has something to do with the fact that they can't make any money using the software, and they don't know why they have it. And I laugh because none of these softwares are managing my money, and none of these softwares are position sizing and creating stops. All these tools are crutches that somehow manipulate and take advantage of and work with price and volume, because that's the data set that we start with over time to give us clues. And it's what we do with those clues that make a difference. So I'm going to spend a few minutes on what I've done with those clues and my performance in the introductory comments. It's not to brag, because you'll see I have plenty of bad years, but it's to show you really that I do what I preach, and how I trade is how I talk on these programs, and to show you that these tools, I believe, do work. Now, obviously, as we all know, this was an incredible year, and it probably was a difficult year to not do well. But then I listened to Gil and Chris talk about how challenging this year was because of the short-term trends that we had. And I am aware that most trend followers up until the last couple of weeks really underperformed the market. So rally on, and we'll see how long rally on continues. Maybe it's over. But clearly, I knew that the Fed taper talk would be a potential risk to a Santa Claus rally. What I didn't realize, and as so beautifully graphically depicted by my hero Ian Woodward from HGSI land, I didn't realize that Bernanke was Santa, is Santa. So he really did a great job. I was sitting here because I don't work anymore, trade full time, and watched the market trade up while he spoke, which I remember the days of yore when the market was crashing, and whenever a talking head came on, the market actually dropped. Disclaimer, this is for educational purposes only, as usual. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. And you'll see I've had my years that I've lost money. And I'm not affiliated with any software vendor or trading company. Everything that I use I have paid for. And I have certain programs that I have become very much engaged with from a user perspective. And but initially and to this day on most of them, I still pay for them like everybody else. So the agenda will be a little different because of the talking about some my trading. But I'll start with a little update on what's going on with the summit in New York. A little bit of intro again, who I am for people that are new. Specifically want to mention two influencers in addition to my usual that have really, I think, changed my trajectory this year. I'll do my top-down review, and for understanding the market, it's a combination of Edge Rater, really the elder indicators and TradeStation, HGSI. For sector rotation, there's no program in the market, and believe me, I've got several of them that is better than HGSI. And then for stock-down selection, again, I use HGSI for top-down and bottoms-up. You notice I don't talk there about how to make the sale and how to manage the sale because I got to do that during the market. And for that, I'm going to use my real-time tools in TradeStation, but I'll show you some of the indicators, including ones that I'm offering to the New York City meeting, and then we'll conclude. So you saw this last week. There's been a few little changes. This meeting is on. I appreciate the early adopters. You know, I never considered not having this meeting. Since I don't sell anything, I either can charge a lot of money for the meeting and hope people show and I make a lot of money on the meeting, or I accept the fact that the meeting is to enrich my and others' education, and that's it. And my hope will be to break even. And I've got plenty of people to break even. There is a limit in share count, and I suspect we'll actually get pretty close to it. The objectives are there. It's really about high growth stocks, how to find them, and more importantly, how to trade them. Finding what are the characteristics of great stocks. Use HGSI, various websites in your choice to scan to find setups and find those great stocks. And then it'll be on the weekend, so it won't necessarily be real-time trading, but using real-time platforms to find triggers, implementing money management and risk strategies, and then adding other things to our toolbox, such as seasonality. The key speakers, George Lee and myself and Chris White from Edge Rater. Chris has been instrumental in working with George and with me over the years, and really, you know, most recently with George, really customizing Edge Rater to automate the MOBO breakdowns, etc., that George is so fond of. Now, since I don't sell anything, I have to cover the cost of the meeting with the registration fees, and just to spend a couple seconds there because there's been some changes, reductions. The original $750 fee is intact, and that is for people that single attendees, solo attendees, who want my TradeStation indicator package. The $500 level is for those folks that want the entire meeting, but not my TradeStation indicator package. And if you're a couple and you do not want the TradeStation indicator package, I'll make it $850. Couple meaning same sex or different sex, but formally married, not neighbors. I'll include in the fee breakfast each day, snacks, hydration, and I've got enough that I'll also say I'm going to include lunch. There's a meet and greet reception on Friday. My vision for that is different. We'll hold that at a restaurant between my house, my condo, and Times Square with a private room. If I can get up to 20 attendees, and we're about halfway there, and we just started launching this meeting, then I'll pick up dinner. If we're below 20 attendees, then dinner will be on your own, meaning you'll order off the menu and have individual checks. At that meeting, George and I will kick it off and spend some time really on getting everybody up to the same level on HGSI setups and setting up scanning. All attendees will receive code for everything that we do in Thinkorswim, and part of what we want to do on Friday night is make sure you know how to get that code into Thinkorswim so you can use it. And there's my email address, attendance limited. I've asked people have asked me for a more formal agenda and whether or not this conflicts with the PV meeting. I would consider this at minimum to be complementary to the PV meeting. The first part of the agenda will be setting up tools for your success. Those tools include HGSI, TradeStation, Thinkorswim, EdgeRater, and Magenta Trader. George Lee uses a number of websites, FinViz, Stock Scores, among others, and although George has become part of the HGSI family and certainly has, I think he's added a lot to the family, frankly, he does use a number of websites which many of you may find to be useful. Part 2 will be finding setups using tools, so how I and others use the tools to find potential stocks to trade. Part 3 will be actually how you trade, looking for setups. Once you find setups, what are triggers, and then how do you manage your trade. Part 4 is, George and I will both talk about, and Chris will be integrated throughout the discussion of how we do our nightly review to set up for tomorrow. And then a little bit about how people might track their performance. I use Gameskeeper and a number of other tools, and I'm sure others have their favorites as well. I should have called it the Be Your Own Guru meeting because, this is just, again, you've heard this before, a comment Ian made to me in the 90s, and, when in his British accent, Jeffrey, I'm not a guru, I'll teach you to be your own guru. And so true. This is the way it should be, is that you should not rely on any individual for making your decisions and responsibility for your portfolio and your family wealth. Everything that you do is your own responsibility. And even when you give money away to be managed, there's a responsibility in knowing who's managing it. And to me, it was create those influencers that help to drive my trading. And people have seen these before, so I don't need to spend much time, whether it's Elder, Van Tharp, O'Neill, Morales, Catcher, Woodward, and Brown, and Bigelow, among others. Now, despite the fact that I have a huge number of programs on my desktop, if I had to cut it back or if notebooks decide to reduce the size of their hard drives, I'd have to have a real-time trading platform. Thinkorswim, I think, offers a lot of advantages over TradeStation, but as I've said before, I've got a lot of investment in TradeStation indicators, so I'm keeping both. I have to analyze the market. I don't know why I want to go to a website where it takes time and I have to be online when I can do everything in HGSI. I use EdgeRater. I use Magenta for seasonal analysis. And then as you've seen on these webinars, I also use a lot of MarketSmith. So my story. I don't put this here for any other reason but to start to address, can you do it yourself? And especially to address those folks who have said to me they can't make money with program XYZ, so they think they should get rid of it. What do I think? I'm a physician entrepreneur. I guess, I don't know if you say that about yourself, but I quit practicing in 2003. I've had a number of startup businesses that I've sold. What I'm talking about today is a portion of my net wealth that's in my trading account. Since this is a portion of my net wealth, I am willing to take much more risk than most. Because of that, over the years, I've had some really outlandishly bad and good performance. Over the last year, things have changed, and I've tried to stop playing chutes and ladders with my portfolio. This has probably been the first year that I've not been building a business or trying to sell one, and I think it's the first time that I've actually had time to manage money correctly, or try to manage money correctly. I practice what I preach. I use EdgeRater, Elder Indicators, and HGSI to assess the market. I do this daily. I use HGSI from a top-down approach. I can't resist some bottoms-down, bottoms-up action, so I use the GIF function, which I show at the end of every webinar, sprinters for a bottoms-up kicker, and I supplement as well with seasonality. My favorite setup is a pullback in an uptrend with new momentum. Because of my belief in and interest in Morales and Catcher, I should also add Bible gap ups and pocket pivots as a tool to buy into uptrending stocks. I have tried to automate as much as I can my buying and selling, and I have a number of tools, and some of the vendors are there, ARPS, Tradeformers by Versace, my tools which are based off of Elliott and George Lee, and then EdgeRater. I have had my challenges in the past leading to big drawdowns. And I'm sure I'm not the only person here who's had periods of time when they were too bullish. I always end by saying trade the market we have, not the one we think we have. I have to start listening to my own words. My position sizing was wrong. Still have that a little bit. I allowed small losses to turn into big losses, big problem. Did not have enough time, and that was probably the most critical thing that affected my trading before this year. And I had this great business partner, but boy, sometimes he was painful about this, and he kept reminding me that my most important investment was my last startup business, which we subsequently sold to a public company for a lot of money. And he was right, because I'll never make that kind of money over a short period of time in trading. This year, I really had the advantage of getting to know two people. And one I've left to protect his name with just the R. Anybody's been to HGSI or even the Anaheim meeting know who Fred is. These two really affected my trading. And Fred's got too much money, so he doesn't need to have a worry about getting a piece of my return. And George, I should only be so lucky to be consistently as good as he is. So I'll tell you about these two and why they made a difference to me. Fred is the ultimate don't read a book or judge a book by its cover. Fred is a of-age man. He's a big guy, and he's really nice and really friendly. And I've known him for a long time, and I thought he was a farmer, because he is a farmer. But what I didn't realize, he was a Harvard-trained economist who grew up the street from the big O, William O'Neill, who has breakfast on a regular basis with Warren Buffett. And the guy is, to put it mildly, brilliant. And I just wish I would have known and realized this a decade ago, not just over the last couple of years. Fred is a no-nonsense sort of guy. He takes big positions. When I say big positions, I don't say he buys 10,000 shares or 5,000 shares. He judges his positions in percentages of the company. And I guess if I owned a company, getting someone like Fred to take a position would be he's not an antagonistic investor. He's or an activist. He's just a very smart guy. And I think what I learned from him and really stressed is to let your winners run and cut your losses short. And when I say let your winners run, I think the first time that I really stood up and paid attention, Fred put up a list of his family, his holdings, and he manages some family money. And he talks about Tractor Supply and other great long-term blue chips, that many of which are $100 a share, that he has cost basis of $5 or $6 on. And clearly, as I look at my performance this year, and frankly what's kept me alive over the last decade, because I've had some pretty bad trades, when I've tried to do things I don't understand mostly, has been the big winners, the Celgenes, the Valiants, the Jazz this year, Halliburton off the bottom. There's been some great stocks that have just had great returns. And much of, I think, Fred's financial success, besides the fact he's very diversified with his farming and others, is because he's recognized long-term winners and he's let them run. He has simplicity, a number of different searches he uses, and I've incorporated those in some of my scanning as well. George is a little different, a little bit younger than Fred. George has become a personal friend. He's a great trader. I always knew of George because he's been a frequent guest lecturer for a number of folks. And before Magenta Trader, I used a lot of Best Choice for seasonality. And George was always their keynote speaker. And I first got to know George a little bit better maybe 2 years ago when there was an Anaheim meeting, and I went to. Outstanding meeting. It was a lot about how to trade and not just using software. And George was, again, a major speaker. A few months later, I saw him at a Vegas meeting for Magenta Trader. At that time, I still didn't know him real well, but I had an ace up my pocket. And my ace up the hole in my pocket was that I had dinner plans with Gil Morales and Chris Katcher. And yes, I did stick him with an expensive bottle of wine, but I thought I was paying the bill. And I invited George to come with, and that just clicked a relationship at that point. And George and I have become very good friends. We have spoken together on the podium multiple times. We have great chemistry together. And I learned a lot from him. George trades for a living. He's a tennis pro as a profession, but he's a trader. He's got some different influences than I. David Elliott, Dan Zanger, John Carter, Tyler Bullhorn, Mark Minervini, Jesse Stein, and then we share Morales, Katcher, and O'Neill. So he comes from the market a little bit different than I do. I come from the land of the kahunas, and he comes from the land of the squeeze and the mobile breakouts. But the funny thing is we find and trade the same type of stocks. He's a seasonality expert, respected lecturer and teacher. He really does a great job lecturing about common sense use of tools for executing trades, and he has demonstrated great returns. I've had some pretty good returns as well, but this guy likes to talk about it 10 bangers. That's a 10 times return. Now, I'm mostly stocks. He's mostly options. When I buy options, they're stock replacements. They're usually very high delta, and if I can get a stock and not pay much in extrinsic value for the option, I might buy the option instead, but as a stock replacement, he is buying lower delta options, a few strike prices out, and making a huge return on a small investment with a lot of contracts based upon a movement short-term in the stock. For all of us, I hope, certainly for me, 2013 has been a great year, and I'm hoping it'll be a watershed year for me, as I know a lot of my success this year was the market, but I'm hoping that I have more time to spend, that I can actually continue this. Clearly, a bull market makes everybody look smart, but not if you're a trend follower. Top-down, at least this year, top-down investing with a bottoms-up twist is my style. This is the first time I've had to use investments to live on, and I've had time to devote to managing trades. This has led to improved timing of buys and sells, and I still struggle with position size and too many positions. And I don't struggle where I can't manage it, but I don't follow anybody's rules there. Part of it is because my portfolio, as you'll see in a few minutes, is not a small portfolio. And this is just the piece of my wealth that I manage. I'm smart enough to let more money, the majority of my money, frankly, be managed by people who do this full time, mostly not because I believe that they can do it better than me, but because over the last couple of years I've been busy building businesses. Performance to date 2013 in my personally managed accounts. I'm up over 50% for the year. And the only reason why I wanted to talk about that was to start to look back and face those folks that have been canceling software subscriptions, getting out of the market, losing faith, and saying these tools don't work for me. As you can see, I've had a pretty big dollar return. Now, the funny thing is that doesn't include all the money I've taken out. The 50% return does, and I guess the $2.5 million does. But when I look at my the portfolio equity curve, I'm not good at tracking outflows of money. Year to date, the markets have been super strong. I'm happy to outperform both. My goal is to beat the S&P 500, and I always look at that on a weekly basis. So this meeting and my program is about HGSI, it's about EdgeRater, it's about Magenta Trader. Those are the tools I use to find my stocks. Everything else that I've had and I talk about are about timing of entries and exits. So I've had this trading account for a decade. I funded it originally with about $750,000 or so in 2003. It's when I had sold my first business. Put a little bit in 2005 when I had a chunk of another business that we sold. I put a lot into the account in 2010, and you can see the big jump between 2010. Everything else, and then I put in a little bit when I left Cardinal in 2013. I put in some stock that I had cashed in, paid taxes on. If I look at all the money in minus condo purchases and minus big checks to decorators, but not including my weekly allowance checks, I put in about 2.4 million. So actually I put in a lot less than 2.4. Over a decade, I've tripled that in this account. And the S&P 500 has done very well over this decade, up 93%, which is over 11 years, which is kind of interesting because it's all about timing. If you talked to me in 2009, I had barely had more money than I put in, so I had 6 years of no performance. But then you look at where I've gone from 2009 to, ninefold up, essentially, with some, in capital infusions, but most of this has been market return. I got hammered in 2008. Let me say it again. I got hammered in 2008. Hammered in 2008. Most of it was because, people see that I've lost about 60 pounds from my peak. The first 40 pounds I worked at, and then I was sick for about 2 months, 3 months, and I lost another 20 pounds, and I was just a mess. And I guess I learned that important message that you don't trade stocks when you feel like crap. Enough of me. Market thoughts. The bullish sentiment, seasonality, Santa Claus, just right, improving economic picture. It was interesting. GDP was great. Unemployment was slightly worse. The market traded up. Consumer confidence growing. That will probably help retail sales. Indices continue their march upward. High relative strength still outperforms. Budget deal this past week. I'm not sure how good of a deal it is. It released some of the sequester funds, but it sort of perhaps eases some of the tension between the left and the right. And the Fed clearly threaded the needle. They did reduce the amount of, or taper the amount of bond purchases starting next month, not this month, so they pushed it out a month. But that worked for the hawks. And they had a very dovish, I thought, statement in the words from Bernanke, which were music to the ears of the the Fed doves. Bearish, you're still living under a Hindenburg-Omen. We're still waiting for that major correction. There has been a start of taper, so that means interest rates will creep up. Bullish sentiment is high. Maybe it's too high. When you look at the number of bullish versus bearish advisors, you're at a correction point. And I also get nervous when the market's had a huge run and the talking heads are keep saying that valuation is fair. So last week I said the lower left, upper right stocks, as indicated in the box on the left, which we chose in the Palos Verdes meeting in October, were on the verge of breaking out, and they broke out. One of the things I said last week that was pushing me towards the bullish camp was that we put together a couple of different portfolios of leaders. This was stocks that went from the lower left to the upper right-hand corner in their stock patterns, typically tight, no more than 2 or 3 in an industry. And we do this at every HGSI meeting. And we look at this as an indicator of what the market is doing because I buy stocks that are more like these stocks rather than Dow stocks. And historically, the LLUR list has rolled over before the market has. We called it other words like the E-index, the Germ index. So LLURs were breaking out. That was bullish. They look great. Pocket pivots on the index with huge volume because of index expiration on Friday. The Canaries, defined in the box on the left. These have been big leaders. And I've owned a couple of these, but this isn't where I made my money. I wish I would have owned more of some of these. I've owned some Google, a little bit of Google for a while. I've owned some Facebook and a little bit of Priceline. Netflix has a big seasonal play coming up, so I'm likely to be buying some Netflix soon, or at least buying some George Lee calls on Netflix, which means some low delta calls that are a couple strike prices out, looking for a big return on a anticipated seasonal move. But you can see that they had a little bit of a wiggle on Thursday, but these stocks as a whole continue to lead, and many of them, like Amazon, are setting all-time highs. What I want is to find the next Gentium Spa. Now, I found it about 3 weeks ago, and what I'm looking for are these stocks that are pulling back. And I'm looking for stocks that are pulling back and giving me a sign of momentum. Now, one of the reasons my performance went up so much this year, I think, is because I started looking at a lot of smaller stocks. Price, I dropped down to $2.50, and a lot of these stocks break out. But this was a big leader, and I guess you could say that this is a very long saucer that all of a sudden broke here in, I guess that must be June, broke above its 200-day moving average with a, well, I guess it wasn't below the 200-day moving average. It might have been a viable gap up. And it broke above it with a kahuna in huge volume. And then it's given several entry opportunities of pullbacks to the 17-day moving average. Fundamentally, I don't know how well this projects, but it started making money. We started talking about it on this way up here. And why, this is what I want, stocks that are growth stocks, making money, breaking out with momentum, and I'm going to try and nip them on their pullbacks. This one got bought by Jazz this week. But that's the kind of stock in high growth stock world that I'm trying to find. Do not miss the upcoming seminar in Palos Verdes, March 29th, 30th, and 31st. I go there to learn, and I guess I'll spend a little bit of time at the podium as well, as will Fred R., who I mentioned earlier. The website for HGSI, highgrowthstock.com, free weekly reports. If you go under investing strategies, you'll see a number of names, including mine, and you can download my videos from there. They give software trial for free, and my blog address is right there. Weekly market review also can be found on YouTube under JAS Cancer Doc, and I've done this weekly for a long time. And by the way, I can track substantial improvements in my trading because of these, and this forces me to follow a trading plan, frankly, or at least a plan for getting ready for trading, which I do the same thing on a weekly basis. Last comment, please strongly consider our meeting, February 14th, optional 15th and 16th. Really working hard to make sure that this will be a great way to spend your money, and you get to also participate in the New York Traders EXPO. Party message, as Ian told to me, I'll say to you, be your own guru. It's your responsibility to learn and develop a trading plan that works for you. Investing is a business. Make sure you have the right employees, including tools and software. Continuing education matters, which are why I go to so many educational programs. Trade the market we have, not the one you think we should have. So, sorry I went so long, but I felt with all the folks, telling me about their difficulty in making money with various software packages that I just had to interject. Let's look at the performance of the market last week. So these will be a series of snapshots that I use and then I archive that gives me a clue to what the market is doing. And I store it in an Excel spreadsheet, and I make them either in EdgeRater or within HGSI. So one of the things that EdgeRater can do is you could take a list of stocks, and then you could run that list of stocks from the start date to a stop date. So I looked at the last week, 12/15 to 12/20, and within that, I try and find clues as to how the market did overall and were there certain parts of the market that did better. So one thing that always stands out is there's always a peak in the 260 to 280 range of ERG. High ERG outperforms, and you can see high ERG outperform this week. And the other thing that's been a big theme of this year has been relative strength drives everything. Over the past week, it was interesting, some of the lower earning stocks did as well as the best earning stocks. Group rank, which should be more important as a short-term rather than a long-term indicator, certainly a trend to being important. Letter rank, still, the B's, C's, D's, and E's led. A's did not perform as well, although they were up for the week as well, and sort of a hodgepodge under boxes. High earned and high relative strength is my message. Was it a good week? Yes, it was a good week. So you look first for the S&P 500. This is on a Friday close to Friday close basis, and you could see the S&P 500 was up 2.42. So everything that I'm going to look at is going to be judged against the S&P. Why? Because I spend too much time doing this. If I can't consistently beat the S&P 500, I should buy index ETFs. Black is positive, red is negative, as you can see on a Friday to Friday, and frankly, a little bit different on a Monday to Friday, but predominantly everything is black. Very few groups are reds. So this was a very powerful market week. So what else do I know? I know that the IBD 50 beat the S&P 2.42 versus 3.15. The HGS 100 was up 3.81, 80% plus winners. My portfolio, to make sure that it's ballpark, this was up 3%. Now this is not fair on anybody because it's equal dollar positions, and that's not necessarily the case in my portfolio. This would weight small, inexpensive option positions the same as a big stock holding like Celgene would get the same amount of credit as a $1 option flyer. But it does give me directionality. If I bought the stocks that we went over last week, we'd be up 3.23%, 85% winners. It tells you, A, either I'm a good stock picker, or more likely B, it was a great market week, and I'll take B. A great market makes everybody look smart. Some of the passive lists that I look at, Best of Woodward and Brown was up 2.93. That's a passive list. Well, not passive because it's actively done for you on a weekly basis. Pocket pivots were up 3.47, not weekly basis, rather daily basis. Bible gap ups from Friday were up 3.73%. Best Wood and Brown under $15 were up 4%. And the GAF All-Stars, again, 80% plus positive, were up 3.8%. So, great week to be long. I mentioned the Hindenburgs, and there were a lot of close days. Right? To get a Hindenburg, certain characteristics have to occur. Your new highs and your new lows have to both be above 2.2. You have to have a rising moving average on the market, a 50-day moving average. So the market's going up, lots of new highs and new lows. McClellan has to be less than 0. And the new highs cannot be more than twice the new lows. When you hit all those, you get the omen to fire. You look for a series of omens to fire, and about 25% of the time they'll indicate a major market correction. There's been some discussion about whether we've had omens, not omens, how many fired in December. And here's where it's gotten interesting. You had this day, and it depends what you're measuring, frankly. I only measured on this day here on the 16th, 2.08 new lows. Now, if it was 2.2 new lows, it would have been a Hindenburg omen that day. So there's, a lot of it's going to depend on how good your data is, your source of your data, and, there's no issue with this program, and I'm sure with other programs, I tried HGSI, on the calculation of when a Hindenburg occurs. They do it correctly. There's some issue with the definition, and the definition has really come down to which stocks you include in the NYSE, do you include preferreds and some of the warrants. Bucketology, 69% of the S&P 1500 traded above the midline. That is a big improvement over a week, trending towards bullish. 20% of the stocks trading above the upper band. A sign of overheating, but not necessarily an imminent sign of a correction, but getting to a point where you have to expect some of these stocks have had a big move to take a deep breath. You go back 8 days, which is probably 6 market days, you see the opposite, 72% below the midline, and you could see the preponderance of stocks at the bottom or below the Bollinger Bands. Look at market performance. So across the top, we have the major indices. We have their percent B change on a given day. Then you have where they are, percent B, so where they are within the Bollinger Band. We have a measurement of bandwidth. Then we have percent B times the bandwidth. And we look for kahunas here. You can see we've had a number of blue kahunas over the last 4 or 5 days, which to me signifies strength in the market. You can see we've gone back to predominantly green on the percent B, which means the indexes are near the upper half. And when I look at the percent B times bandwidth, which is a great indicator of market strength, it looks like we've gotten over this red stuff here, which was the pain in the market, and perhaps we're moving on to greener pastures. These are the days where bulls get fat and happy. And you can see why trend followers have had a hard time this year, is we go through periods of time where we get a nice run, and followed by some lousy, nice, lousy, and we're not getting long periods of time where the market is running. And that's what's killed trend followers. But it's also been a year that if you got great stocks, you pinch your nose and don't pay that much attention to some of the daily garbage on TV, that some of these stocks like Valiant, like Jazz, like Celgene, like Gilead, like Gentium Spa, have just continued to chug, chug, chug and run up throughout the year. I mentioned George Lee's setups. EdgeRater also automates. You can define what goes in. I look at stocks 2 in 150,000 shares, greater than $2, greater than 150,000, and it identifies who's in the squeeze. Breakouts in the squeeze, PSAR, mobile, pocket pivot, counter channel breakouts, and this helps me to do some searching to find stocks that might be potential for going into. These are triggers, and I guess could be the squeeze is the setup. So I spend a lot of time reviewing these stocks on a nightly basis, and I like some of them. We'll talk probably about Ligand today. Love, Jazz, Fleetmatics had a great week. Dillard's has been a great story this year. All right. So, and then lastly, I'll talk later about my group inclusion filter. But the whole point of the group inclusion filter is if I have a number of lists of top performing stocks, wouldn't I want to buy those stocks that have made it into the majority of the list? And here's Jazz. You can see the types of lists. IBD 50, the nightly weekend reviews 85-85, New America, MarketSmith 250 growth list. Some of my proprietary lists, top EPS, top relative strength, timeliness, fastest growing, HGS 100, IBD 50. All right, Jazz, New Skin, which is an Herbalife-like entity, SoFun, a Chinese internet play, Ambarella, technology store, networking, Aris Group, and networking equipment, Generac, the generators. So I run this test to sort of bottoms up to find out which stocks are breaking into most of my buy list. And then if you hit a lot of buy lists, I need to look at you. So let me close that down. And let's jump into TradeStation, again, looking at the market. I think you're going to see big turnarounds. I don't prep for this. I don't have a script, so I haven't looked at all this. This is what I do anyways. So you had your days of pain in the NASDAQ, big green day on Wednesday, Thursday, and Friday, trading near the upper envelope, a place where you might expect to run into some resistance, but reality is the indices like to run up the upper envelope. It's green on weekly, green on monthly, all looks great, but all is not great. I got a new high on price action on the NASDAQ, and I'm not even breaking the midline on the MACD. Bothersome. I've got a clear divergence on both the line and a clear divergence on the histogram. So that just tells me that as this market is going higher, perhaps there's not as much conviction, and it is an indicator that by itself I don't act on, except I'm nervous. But frankly, I've been nervous about this divergence all year long, and market's gone higher. S&P 500, same thing, up top of the envelope, green, green, and green. It too has not broken the MACD histogram midline, clear divergence on both the line and on the histogram. And then the big stocks, the Dow Industrials, at least has broken the midline, but still, I think, shows divergence. So I got divergences abound still, and those could be something to be concerned about. Now, a comment about the indicators that I'm including for those folks that want them at the upcoming event. What I do in the market is I spend my weekend looking at a lot of stocks, and I build a big watch list, so about 1,000 stocks. And I'm basically scanning it throughout the day, looking for pocket pivots, green candle lows and green candle highs, ISO failures, which is a sign of a stock failing at the 50 moving day average, squeezes, MOBO breakouts and breakdowns in the squeeze, and Bible gap ups. All of those plus my version of the high jump indicator, which basically I can plot here, and from a 0 to 100, so rather than having to look back and compare it visually, I set 100 as the highest high jump over the past X days. I can set the number of bars here. I'm looking at 200 on the daily bar. So the highest high jump value in the last 200 bars would be set at 100. And then I want to know what percentage am I towards that of the highest. And it's been very effective. I can chart it. I can also put it in a radar screen. That's what comes with my free indicator set, the high jump. And you can use these all from a perspective of charting, radar screen, and scanning. And I'll teach everybody that gets them at the meeting how I do all that. So I basically watch during the day, and you can see the number of Bible gap ups, just telling you the true amazing strength of the market. Mobile breakouts from the squeeze. By the way, these are firing throughout the day. And you can see about 80 or 90 mobile breakouts from the squeeze, which is one of George's and mine favorite triggers to jump into a market. Just for the sake of completeness, I'm scanning, I'm looking at various candlesticks, MACD divergence, DI crossovers, and then these are some ARPS scans, radar screens that I use looking for pullbacks in an uptrend. So, market's strong. Futures are not yet open. Let's see if we can rally into Christmas and maybe the first couple of days of the New Year's. No guarantees. The next 2 weeks will be strange because the holidays fall in the middle, and it would not shock me to see Mondays being the only days that trade with any volume. Tuesday will be Christmas Eve, and I guess New Year's Eve. I guess New Year's is on Monday. I didn't even look at that. Whatever day New Year's Eve is. Wednesday is Christmas, so we don't expect a whole lot of things to happen on Tuesday, Christmas Eve, Wednesday, Christmas, or frankly, the day after Christmas. And then you get to Friday. I suspect a lot of professional traders may actually be taking off a lot of this week. So What that means is when you get weeks without a lot of volume, you get lots of volatility. Yeah, New Year's Eve is also a Tuesday, and so you got both holidays are on Wednesday. So midweek holidays will be, I think, somewhat strange and may affect the market. So that's why I want to look at my performance this week, because I'm not sure the next 2 weeks, I don't know what to expect. I expect volatility, low volume, and I'll probably end up right where I'm at is my guess. All right, let's jump into HGSI and start my top-down review. Sorry this is going long today, but I wanted to go over how I trade a little bit more and show performance, because there's a lot of people out there that don't think they can do it, and they blame the tools. And I would argue that the tools are fine. You have to put together your own business plan and find what works for you. So I always start by going into the Woodward and Brown user groups. These are the latest ones on the website, Major Markets Plus. I'm going to go to top-down view, which is all technical but bounced over the last couple of weeks. And I could see on raw combo search scan, small caps leading. That's why I did well last week and why growth stocks did well. There's a lot of small cap stocks there. I could see that volatility, silver, gold, and dollar are on the bottom where they've been most of the year. I can see that big stocks, SP 100 and 500, underperformed the small stocks. Okay, I see that all in 3 minutes or 3 seconds. Looking at HGSI, look at the S&P 500. And I'm not going to spend a whole lot of time on the indexes because I already showed you their performance year to date. But most importantly, to show you that, there's that Gentium Spa. Come on. All right, there we are. That we've been in just a beautiful uptrend throughout the year. We've had a series of small pullbacks. But what I think is most interesting is we've now broken out to new highs on the S&P 500. So a very bullish scenario would be for us to trade up and then test that trend line set by my crosshairs and see if that can become a new resistance or new support rather, or is this just a one-day wonder, and are we going to pull back into our trading range here that we've been in for some time? A couple kahunas last week, including Wednesday. Wednesday was so beautiful because it occurred on a pullback to the 50-day moving average in a tightening area of the Bollinger Bands. That's the S&P 500. Look at the Dow. 30 stocks. Similar pattern, a pocket pivot on Friday, kahuna on Wednesday, huge volume, index changes as well as option expiration, index option. Again, like the S&P 500, breaking out to a new high, confirming what we've been seeing in the Dow Jones transportations. If you are a Dow Jones theory person, transports almost to a new high. They had failed new high right here. Looks like they're trying to get back up there. A bunch of kahunas and pocket pivots. Everything turned green. If I look at the NASDAQ, a lot of small stocks, therefore outperformance, breaking out to new multi-year highs. How could you not make a lot of money this year? I don't get it unless you try to time every one of these trends. I'll make a comment about that as well. I'm not trying to pick on anybody or be mean. It's just some of those trends are hard to trade, which is why it's a tough year for trend traders. And the Russell 2000 getting back close to the highs, trying to break out. 3 kahunas last week. No pocket pivots and no because no volume on the Russell. Last week I talked about every time the volatility gets up above the 200, it's whack-a-mole time. It gets pounded back. It got pounded back with conviction. Let's see if it can break back above the 200s, which will need to happen for this to turn. If you're playing silver and gold to the long side, eventually you'll be right, but you're not right yet. It continues in a horrible bearish market. I don't care that it had a positive day on Friday. That was after a huge gap down day on Thursday. Gold and silver both in major bear markets, big losers for the year. And yeah, they're getting cheaper and cheaper every day. I'm not a believer yet in them. And as I said before, I don't think I'd be long gold until silver until it's above the 200. 100. Certainly I'd like to see it above the 50. If now you're playing, I won't call it fools, but it's got major resistance right above it. The dollar, participated a little bit last week in the Bernanke bump, and I think it's probably more so with the increase in the GDP, and perhaps just the idea that you could reduce some of the ease without a concomitant pullback in the stock market was probably also a boost for the dollar. But you can see the dollar is just languishing, not at the highs, not at the lows, well below the 200-day moving average. I wanted to look at something, so I can get mine back to what I wanted to look at. Silver. Darn it. There's something I wanted to show you, but maybe I've totally forgotten it. I apologize. I'm sure when I play back the video, I go, darn, that's what I wanted to go look at. I know I was looking at one of my other programs. Oh, well. Next thing I want to look at is industry rotation. Industry groups. You can see there's 145 groups, and we are now up to 85, I think, 89 to the upside versus 4 to the downside. So I hope everybody's familiar with the force. Anybody that's not been here before, this is an Alexander-Elder indicator used in a way that Elder didn't intend it to be used. Force equals volume today times close today minus close yesterday. So the drivers are big volume or big change. And volume is the millions of shares. Volume is the big driver. So typically, the things that come to the top have major volumes. Now, the other thing that matters in force is the two of them. There's a 13-day exponential and a 2-day. The 13-day remains positive in an uptrend for a long period of time. The 2-day goes back and forth between positive and negative. So if I have a 13-day positive or green and the 2-day turns negative, that's a pullback in an uptrend. That's what I like to look for. Now, what Ian taught us to do is to say, nah, let's look at that 2-day force, which is direction and volume, and let's rank industries to find out what's moving up now and what's moving down now. So we stratify our industry group ranking by force, and I use this every week to find my top groups, and then I go down into the groups to see the best stocks. So I like to look at the top 10 on each of these programs. So let's just start on biotech. All right, so a lot of emails to me about what do I think about Ariad Pharmaceuticals. Up 16% one day, up 61% for 5 days. So Ariad, I've known the stock for a long time. As I said on the board, I loved it on at $20, and then the stock died. The stock died because there was perhaps more toxicity perceived than was on an ongoing trial than was perceived in the trials that led to its approval. Initially, that toxicity led to a black box warning. My comment about that was a lot of drugs have black box warnings. We consider the drugs that we treat for cancer to be poisons, and many in the lay mind, and many of them have black boxes. That didn't bother me. When there were deaths and complications on a follow-up trial that seemed more to be in those patients getting the drug, that bothered me. And it also bothered the FDA. And on this horrible day for those that were long Ariad, the market dropped as the FDA took the drug off the market. So what happened last week? Now, people asked me in here whether I would be buying Ariad, and I said no. Now, why? I played for long balls. And, you had a huge percentage return from 3 to 6, and I guess if I bought a zillion shares, I would have made 3 times $1 zillion or 2 times $1 zillion. But the problem is I don't like to buy stocks whose drugs were just taken off the market. I went into the stock on Wednesday. Why? because early in the day I had a kahuna off of the 50-day moving average, and I thought that something was happening here. And Thursday it had a little bit of an up day. Again, it was up. On Thursday it was up 10%, and it went to the races on Friday. So people don't believe in insider trading, that it exists. If you don't, I mean, there's the best proof that it exists, because, geez, Jiminy Christmas. Sorry if I offended my almost word, but the drug got reapproved by the FDA. Over here, it got approved by the Europeans. So I should have seen this coming. It's not a high growth stock anymore, but it's probably a pretty good value where it's at, and I went big on Friday in the stock with its reapproval. And what I put on the web was, what I thought was most interesting was the number of patients who were started on the drug during the period of time that the drug was off the market. As a physician, it takes me extra work to give somebody a drug that's no longer on the market. And if that many physicians were fighting for access to the drug, I got to take notice to that. So I'd say it's still a buy. Overhead here, that's a long way, and you might see it do, some backing up and down as it fills the gap down. I like Ariad, but I don't like it for the growth from a revenue and volume. I like it because it's going to work its way back to where it came from. I love this stock, Gilead. I've loved it for months. I don't need to say a whole lot about it, except this is my big, I thought this would be the big winner in 2014. I still believe so, and it's because of their hepatitis C franchise. And as the investment world becomes more aware of their oncology and hematology franchise, it goes higher. There's the index, Biogen IDEC. You know what? I like this one too. This is certainly the leader in biotech. It's not Regeneron, which is a great company in its own right. I'm a big believer. This company has been a leader for a long time. I called it out specifically off the 50-day moving average several times when would have been a better time to buy the stock. You can see on a weekly run from 50 to 300 since 2010. Why do I think it's a good stock? Again, earnings are accelerating, and you've got a Bible gap up. Just broke up above the bottom of the gap up. You probably would have been stopped out here. I think you got a flag. I think it's breaking out of the flag. So I'm going to watch Biogen IDEC. I like Biogen IDEC. Celgene's been my big winner over the last 2 years. It's probably the best call I ever made on the web. Still a fan of Celgene. Regeneron's pulled back hard. It's got some competition coming into the market. It's still got an outside year, so it's got acceleration of earnings. It's been a stock that's been very popular right now. It's below its 50-day moving average. Had a pocket pivot kahuna on Wednesday. I'd like to see it get above the 50. Too much red up above for me right now. See if there's anything else I wanted to point out. NPS Pharmaceuticals has got earnings coming into the stock. I'm into it. I got into it here again. Kahuna breaking through the 50. I had a nice day on Friday. DI crossover, mostly green above. The weekly still red. My short weekly, let me see, I had it here, still red as well. I have a 3-day and a 5-day on the weekly. So uptrend, pull back a little deeper than I want, breaking through the 50, had a kahuna. I thought MPS Pharmaceuticals looked interesting. Ligand wasn't a great company as a marketer, appears to be a great company from a royalty perspective. Has some positive earnings growth coming in next year. They have a big piece of a drug called Kyprolis, piece of the royalty. When I say piece, they own royalties on it. And the reason why Amgen bought Onyx was because of that drug. So you can see a nice uptrend in Ligand. So this is all about growth in earnings related to royalty payments. They don't pay a dividend, which is kind of interesting, which allows them to invest in more products. But here's my signal, or my trigger. Uptrend, pullback to the 50-day moving average, pocket pivot, DI crossover, turning green above. I like Ligand, made it to my list this week. There's a lot of nice looking stocks in here. Let me comment about small biotechs. I'll pick one. I don't know how to play these stocks. Okay, I can't say that. I do have a couple of very cheap biotechs in my portfolio. And what I've done is based upon story, not on technical analysis, and really not much on fundamentals because they make no money. But based upon story, I bought a number of stocks that are less than $10, and I put them away for a rainy day and hope that one of them pops. This is the pop that you're paying for. There's no way that you got into this stock before that pop in the prior 2 or 3 weeks based upon technical analysis. These are things that either you're buying purely breakouts from the squeeze, breakdowns from the squeeze, you're coming in after the stock has moved, and that's not the kind of investing I'm doing. So, if you own the stock at 10, it ran to 24 in one day, or in a couple of days, you're a happy man or woman. I just don't know how to find those. So I'm going to have a couple that I think are potential for that, and then hold them for the long haul. One of them, I'm not sure if it's going to be on the next. So one of them is PCYC. Now this one I held for the long haul because they had a cancer product that I thought would get approved, and it did get approved. It's funny, I sat on a plane with the guy on the day it got approved, and I told him he should be selling the stock. It was, I think, it wasn't that long ago. It was probably in the 120 range. And the reason why I said he should be selling the stock is that all these stocks seem to be selling off after they get their drug approval. We've sold off hard here, 20–25% down. Maybe we're getting to a place to nibble off the 200-day moving average. Great company, great product, will be a leader. Stocks like the drug. Maybe it's giving us an opportunity to buy it. All right, I'm spending way too long today. I apologize, but I'm not planning on doing this next week. Internet software and services. Responses got bought out. Let's look at Google. And we can see Google at an all-time high, it looks like. It's getting extended, but not quite at the top of the high jump bar. Probably got some earnings coming. Pocket pivot on Friday. Everything is green. I mean, I have a hard time, even with my size of my account, buying a lot of shares of an $1,100 stock. I have some old Google that I've been holding. Great stock. Looks great. A little bit extended. These could have been nice add 2 points with these pocket pivots. A little bit of a base in an uptrend. Beautiful stock. Beautiful chart. Interactive Corp. A lot of the consumer-facing cable and content companies have been doing very well. Here's Interactive Corp broke out. There's some M&A activity going on with Charter Communications. Owning content this year has been a big win, and a lot of these stocks are here. George made some money on Baidu this week on Friday on some calls. Nice uptrend. Earnings per share growth slowing down. I still have a pretty big holding in SoFund. And this is, I think I got in, I mentioned last week, I got in around 40. Why did I get into the stock? Break above the 50 on kahunas with volume. And you've had opportunities to get into this stock. Word to the wise, you can usually believe the next quarter of earnings. Don't believe the following quarter because there's lots of revisions. The stock's got great earnings going forward. It's just the earnings provider that HGSI used didn't pick them up. I'm not sure if it's a problem with Chinese stocks or not. SoFund is a big holding. and has been a great return for me this year. Third one down, I got to pick it up here, semiconductors. That's good. We'll look at the first two, verse 3. Hymax, they make Google Glass. I've talked about it several times here. You can see notations of a flag here. Earnings per share don't look great this week. They accelerate this month, this year. They accelerate in the out years. Everything turned green, broke out this week. Looks to be a leader going forward. Of course, I took profits on this one earlier in the month. And I need to reevaluate whether I want to get back in this. I probably need to let it pull back some before I get back in. Micron has been a big leader. Every time I think the stock is slowing down, it gets another leg up. Pull back to the 17, great earnings per share in the short term, flattening out growth in the long term. Would rather be buying this like everything else off the 50 with a kahuna. Ambarella had a big gap up, if I remember correctly, and then trade sideways. Let's see. Actually, check that. Gambarella has been a big uptrend here. It had a Bible gap up on Friday. This has been a leader. Earnings start to look better in out years. Big kahuna, tons of volume, breaking out. So there's a character change here. And I put this on my buy list, breaking out of the squeeze, or at least out of the bands. Bible gap up, everything's green, a kahuna. So it's got many of the clues that I look to see. I think I put it in my buy list. It should be a breakout also. Let's see what I would call it. Pretty sure I've got Ambarella. Maybe I didn't pick it. Well, I like Ambarella. Maybe I like Eris more. We'll take a look at that. I guess Ambarella, what challenged me a little bit was the earnings. I love the chart pattern. One that I did like the earnings on is Eris, A-R-R-S. Breaking out here, breaking out to highs. Had a kahuna on Wednesday, a lot of volume on Friday. Everything's green with nice earnings per share growth. All right. Computer hardware. Can you say 3D printing? BlackBerry, who cares? I don't. Apple. I think Apple needs to buy a 3D printing company. Although they probably can create their own of anything. At least they could under the jobs era. You know, Apple to me is tough to trade. I want to buy it off the 50. I'm going to see if I get an opportunity there. Had a DI crossover on Friday. You know, it's in an uptrend. Everybody watches the stock. I don't have to say anything about it. Earnings per share growth slowing down, innovation stuff, a question. A lot of $600 price targets on the stock. I remember what I was going to show you. 3D systems, I could go through 3D systems or Stratasys. They look the same, breaking out to new highs, not based upon short-term earnings per share growth, but rather based upon the fact that 3D printing is thought to be a seismic change in how things are done in this country, and a lot of interest in the concept of 3D printing. 3D systems is in Stratasys, similar chart, maybe a little bit less extended, are the big guys in 3D printing. I've been fortunate to be holding a big option position that I just keep rolling over and taking the money out of 3D systems. Home builders, all over my list this week. I guess make your own opinion about whether home building is back or not. I thought the news was, depending on which, some were good, some were bad. Let's quickly go through. I never thought I would actually own a home or anything built by Toll Brothers, but they actually built my condo in Florida. It's actually a pretty nice condo. Sideways, finally got above and held above the 200-day moving average. 2 kahunas in 2 days, everything turning green on Toll Brothers. So what's new here? It broke and held the 200. That's new. 2 kahunas this week. That's new. Everything turning green makes earnings. Maybe it's time for another run of home builders. Look at the revenue jump. So maybe we've written home builders off too early. DR Horton below the 200. I'm going to skip. Lennar also breaking above the 200 here. Pocket pivots, a kahuna on Wednesday. Everything green. Less impressive earnings per share growth, but still has growth. Pulte Homes right at that 200 with 2 kahunas and some pocket pivots. Everything turning green. Not the world's greatest earnings per share growth going forward. One of the ones that hit my list was this one. This is M&I Homes, not much in the good earnings. First time when I looked at markets, they've had better earnings. And kahuna, big volume on Friday, breaking above the 200. So there's probably some story in home builders, and I think I'm going to sniff around, potentially getting back in these guys. Meritage has got great earnings per share growth, a couple of kahunas and pocket pivots. So these may be stocks that have pulled back and languished that are telling us it's time to get back in. Next one down is regional banks. I won't spend any time to say here, but we've been talking about them every week. I don't know how to pick them. I think these are things that probably gain in the setting of interest rate rises. And this is the one that I've got a big position in KeyCore, which I'm happy as it's breaking out to multi-year highs. A number of pocket pivots this week. Pick your poison, but you need to have a regional bank or two, I believe, in your portfolio, especially with how they seem to be behaving at the end as the easing starts to talk down, which means interest rates going up. These guys may be able to make more money. Communications equipment. Here's that Aris Groups that I mentioned. You know, this is probably too much of a pullback for most people, but I'm going to nibble. Juniper is up there near the top. This is a smaller networking company, a fiber optic company, AFOP. I'd rather buy it breaking above the 50, but I know where my stop is. The 200 are right below it. I had a kahuna and volume on Friday. Starting to see some green above. Great earnings per share growth. Big pullback, probably too steep that I shouldn't be wasting my time with. But this is one will go on my list as a bottom fish or a pullback. And what I want to see on this puppy is I want to see some volume and a kahuna to give me a signal that it's okay to jump into this. And you know what? I have my volume in my kahuna, so maybe it's time. Up at the top on the list, let's take a look at the first couple. F5, breaking out in a downtrend, but broke above a squeeze here, breakout into a squeeze. Kahuna, volume, pocket pivot, everything turning green. More tepid earnings per share growth, but that looks impressive. JDS Uniphase, like AFOP in a pretty deep pullback, rounded bottom. Pocket pivot, still got to get above the 50 and the 200 for me to be interesting. Qualcomm, actually a nice performer over the last several months. A little bit of a flag, perhaps pulling back here. Pocket pivot on Friday. Don't like the earnings per share growth. Communications equipment has been up at the top now for several weeks in a row. Internet retail, how do you say Amazon? Let's just look at Amazon and we'll go forward. Reaching all-time highs, if I remember correctly. What a beautiful stock. You know, it's got accelerating earnings per share growth, and I'm not certain that it doesn't have enough oomph to meet this, to actually keep going. Amazon, clearly a leader. We'll see how its Christmas did. I want to show you, before I forget, Netflix is that a tight chart or what? What a great leader. Earnings per share actually accelerating next year. remember this chart because you might look at this and say, I can't get anywhere close to it. And that might be the right answer, but I'm going to go to seasonality in a second, and I'm going to show you why you might think differently. I apologize for the length of this today, but I guess I'm doing it early on Friday, either I'm not awake yet or I'm having so much fun I'm talking too much. Application software, don't really know much about ServiceNow. Recognize a lot of names on that list. Pullback, broke above the 50. Kahuna, here's a group being strong. Volume, starting to turn green. I don't like, it doesn't make any money. Citrix Systems, I've always loved the tools it makes. The stock has now always been a great performer. Looks a lot like AFOP, pulled back deep, got above the 50. Kahuna, pocket pivot, might be something to nibble at down here. I'd rather see more earnings per share growth. And then, just for completeness sake, oops, don't do that, back. Once you hit the wrong button, it resets it. All right. In the 10th group here, oil and gas exploration, which has been beaten down of late. There might be some good buys here if you think oil is going back up. I own a couple on that list in the top 10 already, and I typically will spend my time looking at those above the index. And this is typically what you're going to see. These are stocks in great uptrend, have pulled back over the last couple of months as the price of oil has dropped, and looks like they want to make a recovery. Pick, like the regional banks, there's lots of options here. Pick one. The story is the same. Gulfport, Kahuna, pocket pivots breaking above the 50. Cabot Oil and Gas has been making some noise, breaking out here with a Kahuna on Thursday and a pocket pivot both days. Great earnings per share growth. One of my holdings. Goodrich Petroleum, kind of too deep of a pullback for my taste, although it looks like it's turning around. Magnum Hunter, a cheap stock that had some pretty impressive earnings earlier, pulling back, broke above the 50. So you see the pattern, which is big run-ups. All these have pulled back, and now some are breaking out again. I don't know EQT. Here's two great companies on the exploration that have had pretty deep pullbacks. Devon Energy. This historically, on weekly charts, you'll see it was a very $100 plus stock. It was, or about $100 up here. Pretty deep pullback, marred below its 200 weekly moving average or 1,000-day daily average. Is it time? And you have Pioneer, another, I think, great company, has pulled back pretty hard. So you got this pattern of big run-up for a prolonged period of time, pull back, and maybe this is a group that wants to turn around. I want to show a couple things. You notice that on the leading groups, the 13-day force is long-term. The 2-day force is short-term. We're ranked on 2-day force. But this has been such a strong market that almost all these groups have been up for some period of time. You have a couple that have just flipped on the 13-day. So I'm not going to spend much time to the downside here, except to go look and say, show you the groups: steel, coal, home improvement. So now once I've completed that, now I go and I do my bottoms-up stuff. And people that are getting tired of me, stop it and come back later. I can apologize for going so long. I just was energized this morning, I guess. I go into all securities. One of the things that I like to do is just look at sprinters, and people that come on this every week know it's HGSI Strategies, Woodward and Brown, Archive, Reference, Miscellaneous. And this gives me a list here of 70 stocks that are leading stocks. Now this is bottoms up. Not all of them will have great group rank or will have great force today. So they didn't make it to our list. But these have been some technical and fundamentally strong stocks. So every day in my nightly review, I look at the indices, I look at the top 10 index industries, I look at the top stocks in each industry. I run the sprinter one step to see if I can find other stocks that look interesting. Then I do my group inclusion filter, which I always like to do for you because I think it's such a unique way of looking at the market. So let's open up tools, group inclusion report. We'll look at the top 10 of these. And then I'm going to show you my magentas for Netflix and say goodnight. Or goodbye because it's morning. So unusual. So what I have here is this thing called group inclusion reports. I'm going to make a group. Web Gem 12.22.13. I want the top 10, or at least if there's a tie, sometimes you have less than 10. Let's look at Ian Woodward's. These are automatically calculated for on a daily basis. I showed you before best of, and best of under 15 outperformed this week. I like best criteria. I like demand. I like Verge. I like growth, HGS leaders, CLEPs, stocks and groups to the upside, strong EPS, and turnaround. And then I like under Morales and Catcher, I like Bible gap ups and pocket pivots. And so what I'm going to do here is each of these have a list of 8, 10, 20, 30, 50 stocks. I want to know if there are any stocks that show up on a bunch of lists. I hit OK. This is such an incredible, simple thing to do. I don't know any other program in the world that actually does this. So these are the winners. And the winners are, and you could do this yourself. Imagine the time it would take to do this by hand or typing it in. Gentium Spa, Amberella, Wisdom Tree, which we look at every week, Eris, So Fun, Ligand, New Skin, which I mentioned earlier to be like Herbalife, Generic, Alexion, Chicago Bridge and Iron. The majority of these we saw on our top-down review. This is where top-down and bottoms-up comes together. I'm going to open my warehouse review. That's not my Ferrari, but I actually found a canned desktop that goes through various Ferrari pictures so I don't get bored just looking at mine. Not that I'd ever get bored looking at a Ferrari. Part of what you can do when you have a good year in the market, I guess. And in my case, we have a great wife who just took care of me on that. So I've got my scorecard. So I'm limiting to $2.50, under 50,000. Go down to my web gems. Here was the top 10. So we've seen many of these, so this will be quick. All right, Gentium Spa. I don't have to say anything. What a great mover. Ligand, this is the royalty company, pulling back to the 50, which has been a good place to buy with a pocket pivot. I like it. So Fun, the Chinese internet real estate play, keeps moving up. Like it. Own it. Like, not only Wisdom Tree, Maria Balterama's husband's company. This has been on our list. We talked about it so many times. Had a Bible gap up on Tuesday and Wednesday. Sort of a sandwich of a bad day on Thursday. I guess profit taking and moving up again on Friday. Huge volume, makes money, great earnings per share growth. I wonder if somebody's interested in this company for an acquisition because a lot of volume came into the stock last week. Chicago Bridge and Iron, this was a seasonal play. And when I talked about back here, when I saw the entire sector changing, and it's been a huge move off of that 50. It's extended, not. I think it's still viable. Pocket pivot, head-on buy time with volume on Friday, all green. Amberella, we mentioned this, sort of a young semiconductor company in an uptrend, breaking out with the kahuna and huge volume. Eris Group, I already showed you this one on the computer equipment side, breaking out. Bible gap. Well, I don't know why it's not a Bible gap up unless they're good at making on volume, but pocket pivot, kahuna, everything green makes money, looks very nice. Generic, this is the company that I've looked at several times. Here was a flag that it broke above. They make a lot of the generators after big storms. Pocket pivots, don't like the earnings per share growth. Alexion, a nice biotech company with great pricing power because they serve a orphan disease population. It doesn't look great here, to be honest. It's got a pocket pivot down on Friday, but on a day that was really, it made pocket pivot because it was down a little bit. It made it on the volume signature. I don't think it means anything. A number of positive pocket pivots earlier in the week. Red candle high, which might be meaningful. This has been a stock that's had just a huge run. I would prefer to buy Biogen IDEC, lower left, upper right, Celgene, Gilead. New Skin, like I said, this does vertical marketing of skin and healthcare products, direct marketing, unlike Herbalife. And you could see a great move here. I think this stock continues to roll. The fundamentals are great. And now that Herbalife seems to have gotten its potential issues about its business model behind them, I think New Skin continues to go north. That's it. Now, was that not 10 great stocks from a simple test? So I got to get finished eventually. I just, I don't do this for money. I do this because it forces me to go through the market, plus I love to do this. One of the things that I've been playing with is customizing my own scans. So if I like things that are pulling back in an uptrend, let's find stocks that are, let's give it, so it's had a kahuna in force, so its uptrend is up. 13-day force means it's got an uptrend. Kahuna means it had momentum. $2 and 150,000 shares. It's above the 200-day moving average and within 1% of free parking, which is the 50-day moving average. I find a bunch of stocks, and this is how I find my pullbacks. Quick little view. The view is a combination of a filter and a ranking module. This is all about the filter here. And so I want uptrend, pullback, major moving average, broke above the 50, pocket pivot, volume in a kahuna, Rex Energy. So that might be an energy play I might want to look at, a cheaper energy play. Walgreens, the retail drugs, had a nice run, pulled back, broke above the 50, kahuna, pocket pivot. I'm not saying these are necessarily good buys, except these are the patterns I want. Uptrend, not great uptrend, above the 200, broke above the 50 on a kahuna. So I will do things like this as part of my analysis, looking for the perfect setups. Sometimes I'll find them. But these are things that I can do, and I do on a daily basis to help find potential things to buy. So a couple last things I wanted to cover. Let me see if I can remember them. One of them is I wanted to look at seasonality. Here we go. Well, I clicked it. I guess I didn't. I would have started by now. Try that again. This is a great little product. I have Best Choice as well. There are things I like in both. Congratulations to Derek, the proprietor, who just got married. All right, so remember I mentioned Netflix. So what this is doing is it's taking 10 years or 5 years of data, and there's some proprietary methodology. And what Derek basically is doing is looking at sort of normalizing and then charting the performance of the stock day over day by year over historical. What do you see here? Well, first thing I see here is about 6 months of that very tight pattern here within the range. Let me see which is which. All right, the green is the 5-year performance. So you can see over 5 years, it's pretty much done what it looks here, and it continues to meander around, and something happens between the middle of January and April where the stock typically has a big move. If you look at the years, 2008, 2009, 2010, 2011, it didn't work. 2012, it worked nicely. So 4 out of 5 years, you had a big move in this period of time. 2003, big move. 2004, not much of a move. 2005, a little bit of a move. 2006, negative move. 2007, no move. Then the last couple of years, 8, 9, 10, 11, 12. So I see here that the 10-year, not perfect, but the 10-year and 5-year both show seasonality to be very strong. You've got an uptrending stock within the trend. This is where George and I will start to look at some strike prices that are a little bit, maybe 2 strike prices out, and look at buying a bunch of options to play a move here. And why? Because seasonality tells you very strongly that this is a stock that takes off in the middle of January. Let me just take a look at it another way. So you're in a little trading range here and really following along very nicely with what you might expect it to do in coefficient of 0.82. You've got a growth rate of 100%, which is double over a year. The range between high to bottom is 3.5%. It looks narrow, but it's just because the dollars are so high. And you look at optionality, or seasonality, rather, between January 20 and February 28. In 10 years, it was up 9 years. The average up year was 23.6%. I'll take 9 out of 10. So do you think it's more likely to have 10 out of 11 or 10 out of 12? I'll go with 10 out of 11. So I might look at strike prices. I might look at various things that I could do. I hate when I do that. But I find this to be a compelling story. And you could actually do things, and I'm not going to spend that much time, like show the strike prices and it don't show up much here, of the various options, what are available. Derek does this much better. I don't know why they're not showing up bigger, but it can really help you. The program will help guide you as to targets, and then you pick your options based upon those targets. Derek is having a webinar tonight that is free. Go to www.magentatrader.com and you can register for the webinar, and you'll learn much more about seasonality. It works for me. I think I've covered everything that I wanted to cover. Obviously, I went way too long. I apologize for that. It has been a fantastic year to be trading. I hope you all have made money. If not, I hope you can learn to make money in the future. Have a safe, healthy, and happy holiday season. Merry Christmas, Happy Kwanzaa, and Happy New Year. And we'll talk to you on the other side. And please, please consider coming to my meeting. I just want this to become first of many as a complimentary to the HGSI meeting. Would love to see you there. And it is my job to make sure that you go home and feel that you got great value for your money. And that message, you need the information, stop the tape. I'm done. Good night. Have a great, great, great week. Bye, everybody.